think as every market goes through different phases, and then India we had a good phase, expecting growth momentum to continue. On earnings of the companies also will continue, and therefore we are marching towards a $5 trillion economy with more and more sectors and companies participating in the rally. The last 6 months fall, I always call it the reality check. Every market that goes up has to also correct in order to ensure we have a market which goes up and down. At the same time, whatever the concern which normally exists in the market, which comes in the form of excess ownership, excess speculation, uncertainty that could come on the way on variety of things such as slowdown in the economy, investment slowdown happening, then global uncertainty coming in, and valuation when it gets stretched, the market goes through corrections. I think what you have seen in the last 6 months is an outcome of that the correction has come. Now, having seen the correction, I think one must also, learn to play, put the leap of faith on that level, that how when the slowdown becomes reality, what the government will do, what the other thing that could come for the market to become positive. Therefore, my belief is the budget, definitely there's one big focus that came to boost the consumption. Whereas India is historically, the last 10 years, we have been focusing on building infrastructure growth for the country. Now we have started addressing consumption-driven growth, also now being addressed in the budget. Therefore, we need to put our leap of faith on the table, that whatever step that is being taken by the government for the people and for the country will start delivering in terms of growth momentum come back. Both in terms of infrastructure spending continues to be on the high. At the same time, consumption, which is the per capita income, is rising in the companies, rising in the hands of people. Also, we'll get to see its results in the form of consumptions coming back. While that is being the case, we must also pay attention to the global uncertainty, which comes in the form of current Trump tariff, what they call it, and as a result of that, everybody is still keeping the fingers crossed. How the impact will come for various countries, how will impact the inflation, how will impact the interest rates, how will impact the currency market, how will impact the metals and materials market. These questions have been, of course, is coming in everyone's mind. But I only say that from market point of view, normally market discounts uncertainties first. It takes time to actually discount the positivity. Therefore, as we move into the financial year, April onwards, we'll probably start seeing some of those uncertainties getting unfolded and start reflecting the market in terms of its discounting. But having said that, after seeing 2.5 years of bull market, after seeing substantial return coming from each of the indices as well as each of the mutual fund players, we must also be prepared for a consolidation phase, and it's also good and healthy for the broad market to sustain and take it to the next level of growth, which will be reflecting about 1 lakh index and 5 trillion economy. All those things will become real, but all this will come with the lag effect. So the market is always divided into 2-3 parts. The large cap, which is the big companies, established track record, companies that become very large. The rate of growth will come at par with the nominal GDP growth. Then you have mid-cap companies who have a large vision and deep management commitment, good businesses, and same way in the small cap. As you go down the market cap, you will find the rate of growth for such kind of companies is higher than the large cap companies. That's what normally happens in every market cycles. Therefore, the market also discount like that. When small and mid cap trades at a premium to the mid cap trades at a premium to the large cap. The way all trade at a premium, the rate of growth is actually higher than the large cap company. That's why they all trade at a premium. When it becomes excess, they also get corrected. Then what is to be noted in the market is actually if Indian economy becomes $10 trillion economy, first 5, then become 10, then march towards the $10 trillion economy, which is the Viksit Bharat 2047. It can't be driven only by a few companies who are part of the Nifty 50. It has to be driven by the wider set of companies coming from the rest of the market. India is actually known for having many entrepreneurs in the country coming from different states, different businesses with a different background. First time entrepreneurs are also rising. Therefore, small and mid cap as a sectors will remain one of the sectors to stay invested for long term period. Only the difference that you have to make is When I invest in large cap names, I know these are established companies, they have gone through cycles. Therefore, I can always invest in this kind of companies with certain kind of time frame of 3 to 5 years. Whereas when I look at actually the small and mid cap companies, I need to give a longer time frame. I call it a longer rope. For me to get the real benefit of the sectors and segment benefit, from a shareholder's point of view as well as from investor's point of view, I have to give a long rope, which essentially means anybody who invests in actually small and mid cap, they have to look at minimum 5 to 7 years kind of period, even 10 years kind of period. There's only time after going through all cycles, accidents, views keep changing it, market punishment, all these things will get adjusted if you actually stay invested for these kind of companies and the schemes for 7 to 10 year period. Therefore, taking a call on the basis of valuation, in my own belief, is a big photo exercise, because sometimes what I say is 20 times PE multiple is attractive. There will be a number of people who say 20 times PE multiple is costly. Therefore, this is getting that argument. What is the period for which you have to make an investment? I think that is the point that should be considered for the investment purpose. So I think the good thing is when the new governor came on board, I think the expectation with the market, they cut the rate by 20 basis points. It's also coming from the back on the back of two things. One, inflation under control, fiscal deficit a lot more under control. There is a room for us to cut the rate further. Therefore, they have taken the first step of cutting the rate by 20 basis points. Second, they also release liquidity in the system, so that liquidity also start driving the rates down as we move forward. But given the fact that India's inflation is a lot more under control, even the budget has kept the target of 50% of the total debt should be the the borrowing of the total debt of the country should be capped at 50% of the overall the GDP number, which also it's a great step taken by the Ministry of Finance. And fiscal discipline, they already put out some sort of roadmap. And inflation largely being under control, and given the fact and what is most needed in the country, which has been highlighted in the monetary policy, it is the single point focus as we move forward. It's not on inflation, it's on the growth coming back. And that has been the case. My own assumption is the Reserve Bank of India may consider another 20 basis point rate cut, maybe in the forthcoming policy or maybe a little later, but definitely 20 basis point rate cut will come. And after that, the whole steps and the focus of Governor and Reserve Bank of India will be to ensure the benefit of rate cut is also accrues to the borrower of the economy. Therefore, the drive the economic growth to the next level of growth. See, these are the funds which are very nicely positioned from an investor's point of view. Most of the time, all of us go through our own struggle in terms of which fund to choose and so on and so forth. Balanced advantage fund, multi-asset allocation fund makes the choice literally easier to take and makes the job of the investor also relatively easy, given the fact it invests in equity, it invests in fixed income, it invests in gold, it invests in silver, as well as multi-asset allocation fund concerns. Balanced advantage fund has got the system of taking the equity exposure high, low, depending upon valuation, depending upon the mood in the market, depending upon which direction the market will go up and down. Basis which increase allocation to equity if you are bullish, you reduce allocation to equity if you are not so bullish, and so on and so forth. And these two funds are actually ideally positioned from investors' point of view to put most of their savings in these kind of funds, given the fact that it has got an automated adjustment towards equity and fixed income and other asset classes on the basis of certain trend that fund manager notices, and based on the portfolio are constructed. Therefore, investors' point of view, these two asset classes should become the large component of the investment for them. Any new investors who are coming in should make the investment. Anybody who has got not sure about market direction should come in. Anybody who has got large pool of money, don't want to invest in fixed income given the fact they are giving the least possible return. At the same time, don't want to take very high risk on equity. Such kind of investors should also choose the this kind of hybrid fund, which you call it, which is a multi-asset allocation fund, which is a hybrid fund, and balanced advantage fund is also hybrid fund, which is nothing but investing in asset class between equity, fixed income, gold, and silver. There is only one choice. You have to keep investing, and at all market cycles, you have to keep investing, keep investing, keep investing. Don't stop SIP at all. Market will go up and down. The market comes down, you get a higher units for investment. If the market goes up, you get lower units. At the end of the day, rupee cost averaging is a concept in which the mutual fund SIPs are built, therefore question of stopping doesn't arise. Third is the power of compounding. The longer the period you do, the benefit out of the power of compounding benefit. Therefore, don't stop it. Continue make your SIP. On the contrary, the market falls, increase your ticket size. I call it step up SIP. If somebody has started a 2,000 rupees SIP or 5,000 rupees SIP and you have more money to invest, ensure the 5,000 rupees goes to 6,000, 6,000 rupees goes to 7,000. It's called a step up SIP. Keep increasing your SIP ticket size as long as you are able to contribute more for investing in SIP, because at the end of the day, the longer the period you will stay invested in the equity market, only by doing SIP. If you make a lump sum investment, there is high probability start looking at your value and then start thinking that yes, I made money, I've lost money, and so on and so forth. Your decision value will be influenced by the value of your investment at times at every point of time. Whereas an SIP is only one where you don't look at the value, only look at the accumulation. The real benefit of accumulation accrues to you only if you stay invested for long term. Therefore, my single point advice to all the investors, all point of time, including myself, is actually keep investing SIP at all point of time. That's why we call it as a subset important plan. Is actually systematic investment plan. SIP can be termed as a subset important plan in everyone's life, which is nothing but SIP for long term investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.